Hi, good evening all, and thank you so much for joining today's exclusive webinar. My name is Ashish Asthana. I highly appreciate all of you who have been putting requests and emails to us about the topics that you wish to, go ahead with us so that we can take it in our upcoming webinars. And as per your request and demand, we are keeping this exclusive session on ELSS, right? What is ELSS? As many of customers have asked, how ELSS is better than the normal mutual funds? What are the exclusive benefits of investing into ELSS mutual funds? Is not only tax saving, but also can it be a tool for a wealth creation, right? So these were some common questions which comes to our mind on and off, and whether there is lock-in or not. How ELSS is one of the best product within the category of ATC? Of course, yes, it is, but we would be knowing that in detail, right? And to do the same, we have called a great personality from the industry, Mr. Arjun Khanna, who is an equity analyst with Kotak Mutual Funds, right? So we will be discussing, first of all, let's have a quick overview of the market, and post that we would be discussing in detail about ELSS, their advantages, their benefits, and how simplified it is to make the investments. So Mr. Arjun, we welcome you to our show.
Thank you, Ashish.
And over to you, sir.
Well, I would like to start off by wishing everyone on the webcast and Ashish a very happy 2020. All the best for a very prosperous new year as we are entering a new decade. I hope this one is very profitable for all our friends on the webcast out here. In terms of our market view, we are actually at very interesting times. If one looks at the overall market, one sees the Sensex, sees the Nifty at lifetime highs. But a lot of us who are investors actually see our portfolios somewhat different. It actually depends investor to investor. So if we are largely large cap investors, these are actually the best of times. If we are a mid cap investor, we are actually as an index level down almost 15-18%. It was down slightly lower, but we have seen some sort of recovery. And if we are a small cap investor, we saw drawdowns of almost 40% since January 2018. However, in terms of where we are placed right now, we actually believe that we are placed in a situation where things potentially can get much better going forward. If one looks at earnings, we are extremely positive in terms of the growth in earnings for FY21. Consensus puts it at least 20% earnings growth for the Nifty. The small cap and mid cap stocks, which have fallen a lot largely because of demand contraction, we believe that demand contraction or incremental growth should come much higher going forward. If one looks at the overall economy, a lot of us think it's really in doldrums, but there are some silver linings. If one looks at it, we have seen some sort of moderation in terms of interest rates, and that would start to percolate down. Transmission has not been as we expected, but going forward, we are hoping that we see interest rates coming down. A lot of us who do have home loans would actually see on the margin interest rates are coming down. Secondly, in terms of liquidity, we started off this year with a sharp negative liquidity of almost 50,000 crores. Through various instruments, the RBI is trying to increase the liquidity in the market, and we are currently sitting at a situation where liquidity is in excess of 3 lakh crores. So two major bottlenecks, so as to speak, in the market are improving. Obviously, things are bad to some extent where we've seen some sort of demand contraction in the automotive space. Consumption has been slowing. But if we look at the GST data, at least for the past few months which have come, we have seen they have been in excess of 1 lakh crore rupees for the past couple of months, which is obviously pointing to some sort of consumption recovery. So on an overall basis, that gives us some sort of relief going forward. In terms of actual growth of the small and mid cap stocks, we believe we are at least 2 quarters away. This quarter, which we are currently seeing, and some results have come through, have actually been lending to the thought process of some sort of slowdown. But going forward, we believe there should be some catch up going into FY21, obviously coming off a very weak base. Moving forward, if we actually look at what we are here for, also to discuss the ELSS schemes, equity investing is actually not about short-term investing, it's more about longer-term investing. And a lot of these events keep coming into play in the short term. Right now, in terms of a topical, in probably just a week ahead, I'm sure Ashish also would probably have some episodes with you all regarding the same, is the budget. In the budget this time, compared to historical budgets, it actually has lesser meaning in terms of indirect taxes, because with the GST Council, a lot of that taxes have shifted off towards that council and it would not really be taken up in this budget. But a lot of personal tax issues would be taken up in this budget, where we are also very hopeful of some sort of incremental change coming through. The greatest demand right now is the removal of LTCG, or at least some change in the current structure. Speculation is that it may move from 1 year to 2 years, and that LTCG rate may actually go. The second big demand is in terms of dividend distribution tax. So currently the dividend distribution tax is above 21% with surcharge. And if one looks at it, if someone is receiving more than 10 lakhs in terms of dividend, there's an additional tax for them. Thirdly, in terms of personal tax slabs, since 2014, when this government had actually come in the previous time, there hasn't been much change in the tax slabs, though there was a rebate up to 5 lakh rupees, but post that there hasn't been any change. So there is a lot of expectation that this time around there would be some change. So these are the major expectations from this budget. We do hope there is some positive movement towards these issues which have been raised. But coming back to the ELSS, and I did raise the budget obviously because of ATC, which he did mention. So currently the ATC limit is 1,50,000, and we hope in this budget that does increase from current levels. It actually hasn't been increased for many, many years. And one way of utilizing this ATC is the ELSS scheme. Now, in terms of ELSS, or the equity linked saving schemes, is one method of investing for saving taxes. There is a statement, common quote, that you don't pay taxes, government takes them. So one way of letting the government take less taxes from you is by investing in this. So when one looks at the available schemes, there are three things to look at. The first thing to look at is what is your return on that scheme. There are various schemes in the market. You have a PPF, which currently is around 7% closer to 8%, which will be revised by the government on a quarterly basis. You also have a national savings certificate schemes, and you also have ELSS schemes. ELSS schemes have one interesting component where the return, while not being fixed and being variable, is that it gives you a potential of getting equity linked returns. Now, equity linked returns, if we see historically, have been substantially higher than what fixed return instruments give you for the added risk which you take, the volatility in your portfolio. However, because the ELSS scheme has one interesting component, if one looks at it, which is the second attribute, is the time for which you invest. The lockup period for instruments such as the PPF is almost 15 years. But for an ELSS scheme, it is just 5 years. For the National Savings Certificate scheme, it's 5 years. So this is the lowest scheme wherein your money gets locked up at just 3 years, giving you an option of liquidity at an earlier stage. The next interesting attribute of this scheme is that when one looks at the compounding benefits of an equity scheme, it actually turns out to be much higher, which most people don't look at. When one looks at compounding, most people look at an absolute return, but compounding has that advantage of giving you a return on a return. And because equity schemes historically have given at least 200 to 300 bips additional return compared to fixed return schemes over a longer period of time, we believe that this compounding element actually helps a lot in terms of retirement benefits, wherein your retirement corpus will be multiples if one looks at over a very long period of time of maybe 25, 30 years. So on an overall basis, we believe ELSS schemes actually are very much beneficial for investors when one looks at a longer frame of time.
That's really great, sir. So now we would like to know any specific scheme that as a Kotak or mutual fund AMC are providing right now, wherein investors can invest and they can get tax benefit, which is tagged under ELSS.
So actually, most of the fund houses will have one scheme within this segment. Okay. Kotak too has a scheme, which is the Kotak's Tax Saver Fund. So this is a fund which is a diversified equity fund, which is largely, if we look at the breakup currently, we have roughly 58% of our assets in the large cap space. We have in the mid cap space almost 29%, and roughly 8 to 10%, which is there in the small cap space. We have 1-2% of cash. At this point in time, I would like to tell you, since we were discussing the market earlier, we actually took a call 1.5 years back, wherein we decided that since the small and mid caps had fallen much more than what was anticipated, we increased our exposure towards that. So this is one advantage of a diversified scheme, which is a multi-cap scheme. So we do run a multi-cap scheme wherein we can invest across market caps. So we almost increased our exposure towards small and mid caps by 10 percentage points to take advantage of this fall. And we actually believe that going forward, small and mid caps can potentially perform much better than large caps, because the difference in performance since probably Jan 2018 is at a very, very high level. As I mentioned earlier, since Jan 18, we have actually seen the small cap index fall almost 38% and the mid cap index fall by 18%. So because of this, earlier when small and mid caps were at a premium, we positioned our portfolio more towards large caps. And now that this has reversed, we are shifting incrementally more towards small and mid caps, where so that we can provide returns to our investors.
Absolutely. So what makes this ELSS scheme a better, wealth creating tool compared to others? Because we are receiving many questions from the investors wherein they are asking, what is that? How come ELSS is one of the better schemes compared to other equity schemes?
So ELSS scheme has one advantage compared to other schemes. While ELSS scheme is also open-ended, but for an investor in an ELSS scheme, his money is locked up for 3 years. So as a result of which, the fund management team does have one advantage where he has visibility of the funds. Since you have a visibility of the funds, you start taking less near-term tactical calls and you end up taking a lot more structural plays within the portfolio. So actually this type of investing lends itself to more longer-term investing, because the surety of those funds and the need for liquidity actually comes down. So ELSS schemes have that advantage for the fund management team, wherein most of the outlook or the schemes which are in the ELSS space have that longer term positioning rather than a tactical positioning.
Great. So now we are getting many questions in terms of how can we apply for the same. And friends, we are open for Q&A session now. Any questions you have a question mark icon on your screen. You can simply press on that icon and the window will open wherein you can type your questions and we'll be really happy to answer them. So let me show you now, share my computer screen and show you how simplified it is to place order, right? And where you can find our mutual fund reckoner and how you can search the scheme. Right? It is very simple. It just takes about 2 to 3 clicks and you're good to go with it. Right? So let me just share the screen. For that, you have to log on to our website, that is www.hdfcsec.com. And once you log into our website, you have a logged in section wherein if you click on login section, you will have to enter your login credentials to get access to the section inside. Right? This is our website. Right here, you can simply, if you are looking, if you want to search this Kotak Tax Saver Fund, you can simply type here on the Get Code section as Kotak Tax Saver Fund, and this is how the screen will appear. A lot of information and details have been given out here. You can see how it has beaten the Nifty for these years. You can see what is that 52-week high and low. You can also see that this scheme is operational since 2005. So, from a very long time, this scheme has been running and able to have an AUM of 1,000 plus crores, right? So 1,067 crores, approximately you can see at this point of time, fund manager, Mr. Harsha Upadhyay is handling, right? And you can see the returns also, always advisable to see 3 and 5 years return. The average CAGR is about, and since inception also, you can say it's 11.80, which is really a good one, right? And you can see further more information. If you scroll down, you'll be able to see the details out here, right? Now let me show you how to place this order and where you can find it in our reckoner. So reckoner is available on our mutual funds page under the logged in section. You need to click on one-time investment, and right here you can see download report. If you click on it, this kind of a PDF reckoner gets downloaded. You need to scroll it down, go to the ELSS section, and right here you can see that this has been one of our recommended scheme by our research team. So you can go on, type the name of the scheme above and just click on purchase. Quick window will open. Just enter the amount, whatsoever amount you want to put across, and click on place order, and your order would be successfully placed. you will receive the confirmation email, which will act as a proof of the investment, which you can submit to your HR department for getting the benefit under ATC, right? And if you guys do not have, the viewers who are watching right now do not have HDFC demat and trading account, but if you are an HDFC bank account holder, so for them we have launched recently a new product called as Invest Now, which is online mutual fund robo advisory platform, wherein along with mutual fund investments you can also do goal-based goal planning as well. And it is purely for mutual fund investment. So within few clicks, if you are mutual fund KYC compliant, if it's a single account and you are a resident Indian, you can invest in ELSS and other mutual funds. Just you can get onboarded yourself in less than 3 clicks and 30 seconds, and you can start your investments, whether it's an SIP or lump sum, within the same minute. It is available under HDFC Bank Net Banking. You need to click on Mutual Funds tab. At the bottom of the page, you will see an icon of Invest Now, register here. So you need to click it and get yourself onboarded. So let's move towards the question section, as I can see many questions popping in. So let's see what questions we have received. So first question we are getting from Ms. Josna Agarwal. She's asking how to identify which ELSS suits my risk appetite.
It's actually a very interesting question, Jyotsna. So when one looks at investing in the market, one actually should look at the fund philosophy of the fund management house also. Look at it whether it's a diversified scheme or a concentrated scheme. Look at it whether it's a multi-cap scheme versus being a large cap or a small or mid-cap oriented equity savings scheme. So depending on your risk appetite and a discussion with your investment advisor, we actually recommend understanding the fund philosophy first. So here at Kotak, our fund philosophy is growth at a reasonable price. We do follow a BMV framework, which is for us, we look at good businesses, then we look at good management, and lastly, we look at good valuations. I would strongly recommend look at the history of not just the fund performance, but actually look at the history of the fund manager also, which gives you a sense on how he has actually performed over cycles. In a sense, I would actually leave you with a quote. There is a saying that because every time people keep talking of different themes, but generally fund houses who stick to their themes over cycles actually end up making money. And since an equity savings scheme is a 3-year product at a minimum, that gives you that sense. So there's a saying in the market that bulls make money, bears make money, pigs get slaughtered. So as long as you know what that philosophy is and you stay with them over a cycle, essentially we believe you would make money. But in terms of risk appetite, I would strongly suggest understand the characteristics of the fund, whether it's a diversified or concentrated scheme. So if you are an extremely risk averse investor or you have a moderate risk outlook, you'd probably go for a diversified scheme versus going for a very concentrated scheme. If someone has a multi-cap approach, potentially you would get returns across the multi-caps across the capitalized stocks in that capitalization versus just if it's a large cap, which would probably work better for a slightly less risky investor. So in that sense, it's worth looking at the key characteristics of the fund. You could find this in the mandate of that fund.
Let's move to the next question. Again, a quite interesting question coming from Mr. Senthil. He's asking whether investing SIP in LSS for 10 years is good or to go for 5 years.
Actually, it's a very good question, and it actually shows, I think, the investors who have actually matured. A lot of people ask just for a 3-year outlook or a 4-year outlook, but investing in equity is essentially a minimum 5-year period, and I think the majority of the investors shown with this question itself. So we always recommend for a longer period of time. So even if it's a 10-year period, we don't think that's extremely long, depending on when one would require the funds. But a 10-year period is essentially a better way of investing because you get to ride out the volatilities in the market for a longer period of time. And in a sense, you get those returns that the fund offers across market horizons rather than just a shorter term market horizon.
Great. So next question we are getting from Mr. Riyad is asking, what would be maximum benefit on tax if I invest in ELSS?
So it actually depends on what is the tax bracket you're in. The maximum amount of benefit for investment in ELSS in terms of gross income deduction is 1.5 lakh rupees. If you theoretically can invest more within the scheme, and we do have investors who invest even more in this scheme, but the maximum benefit you can get as per the ATC is just 1.5 lakh rupees in terms of gross income deduction. In terms of actual benefit, it depends where you are in terms of the marginal tax rate. So the new marginal tax rate has actually come to almost 45% for the top earners, where the benefit actually goes up to as high as 64,000 rupees. But if you are at a lower tax bracket, say at the 30% or at the 20% level, then your benefit would come down by that commensurate amount.
Right. So again, a quite interesting question from Mr. Pradeep Kohli. He's saying, I have an investment of almost 50K per month towards my LIC, and it's been 6 years now, and I want to shift that investment from insurance to ELSS. What is the best way? I think so. We have shown very seamlessly, right? The moment if you have decided, you can just log into your account and you can make the investment just in few clicks, which is available on our platform. If you have, I don't know now whether you have Demat and trading account. If you have Demat and trading account, we have already shown you how you can do the investment. And even just for information, even you can do it from our mobile trading application. If you haven't yet downloaded, you can log on to Play Store and just type in HDFC Securities mobile trading app. I think not more than 3 clicks, just 3 clicks, and you are done with your ELSS investments. Right. So let's see the next question. All right, so next question we are getting from Mr. Meet Shah is asking, will the current top positions in Kotak ELSS will remain same, or any changes might be there depending upon the changes in the economy?
So I think most, if we look at the turnover of the scheme, we actually don't have an extremely high turnover. But within the top 10 positions, there is a likelihood of new stocks coming in and some of these stocks coming down, depending on the performance of those schemes. So if we performance of those stocks. So if we actually look at the top 10 stocks in the portfolio, which are available at fact sheets within the scheme, you would actually see that the top 10 positions are roughly around 40-45% of the portfolio. Within the same, there would be changes depending on how things do materialize going forward. While we do not rotate the portfolio a lot, we stick with our positions for a long period of time. However, if there is any major change in the underlying circumstances for those companies, yes, there definitely would be changes.
Great. So next question we are getting, how can I do a goal-based planning? Asked by Ms. Deepa. She's saying, I'm 42 years old. Please tell me how to do goal-based planning. So you can come to our website, that's www.hdfcsec.com. Here we have a section of personal finance. You just click on it. Here we have different financial goals, whether you're planning for your retirement, home budget, travel costs, maybe, each, in fact, I would say mutual fund is such a fantastic product wherein each of your goals in your life, or maybe a financial expenditure, you can convert it into goal and you can achieve it by the route of SIP. So that is where our calculator plays an important role. You can simply come here, you can click on it. This is automated. This system will ask you few questions. You can simply answer them, right? And just click on submit and just enter how much you can save for the same, and just click on submit. The system will tell you an approximate value or corpus that would be ready by that time. And the moment you click on it, it will also tell you what schemes to buy for. So this page is here. You can simply go to you can click on personal finance, and then from there you can select the various financial goals which are there, and accordingly you can go about it and you can explore this. Right? Just answer a few set of questions. System will tell you what kind of corpus would be created by that point of time. Right. Considering the time constraint and many questions we are receiving, we'll be able to take a couple of them more. Right. So let's move to the next question. Miss Kinari is asking, is there a need of Demat account? Well, Miss Kinari, that depends. If you have Demat account, yes, you can do it from your HDFC Securities Demat account. If you do not have HDFC Securities Demat account and you have HDFC Net Banking, then you can simply go to your HDFC Net Banking, and there under the mutual fund tab, we have launched a new product called as Invest Now. From Invest Now, you can do the mutual fund investment seamlessly. Right. And also, if you do not have HDFC bank account also, and still you want to do investments, still you want to use this digital platform of mutual fund platform of HDFC Securities, we have Digify, which you can see I'm just highlighting on the screen. You can simply click on this Digify, enter your PAN number. If you are KRA compliant, you can go ahead and you can experience the same digital platform which is available for HDFC customers. For non-HDFC savings account holder, we have Digify, so you can access that. Right. Let's see the next question. Again, an interesting question coming by Mr. Meet Shah. He's asking, which sectors Kotak ELSS is looking for next 3 to 5 years for investment purpose, and what will be the allocation in for?
It's actually a very interesting question. And if I actually look at what I do at Kotak Mutual Funds, I essentially look at mid-cap stocks within across sectors for Kotak Mutual Funds. And there's one sector where I'm personally particularly bullish on. And if we look at the stocks within our portfolios, you would see that we have a outside allocation towards those stocks, which is the chemicals sector. We actually believe that India is in for a very sweet spot currently, wherein due to global factors, due to disruptions, the Indian chemical industry is in for a substantial upturn. Within the chemical space, we are most bullish on specialty chemicals. If we look at the fact sheets and across all our schemes, you would see that we have an outsized position within the same. So that's one sector where we are extremely positive on a 3 to 5 year outlook. Within the same, we also, if we look at other sectors, we are very positive on. It's a large sector and it's probably across all our portfolios. Within tax, it's actually the largest investment is the financial sector. We believe financialization of savings within India will continue to grow substantially going forward. And what's interesting within the financialization part of it, we are seeing a lot of new stocks available for the investors. Earlier, it was largely banks, but now this is actually moved, and NBFCs. This has now moved on to even asset management companies, life insurance companies, general insurance companies. Potentially, there's a new IPO coming for the credit card space. So in that sense, the financialization of the economy, which we have seen undergo a dramatic shift post demonetization to some extent, we believe that as a trend would continue. So in terms of sectors, we do take such long-term calls within our portfolios, and the ELSS scheme offers us one advantage of that to a larger extent, since we are able to take calls without having liquidity risks for almost 3 years.
Absolutely great. Now, many questions we have been receiving. We have missed the webinar. Can I watch it again? Do I have access to the recording? So answer to that is yes, definitely recording would be available on the same link. About an hour's time you need to click. Just ensure if you are opening from mobile app, when you click on the link, open it on through mobile browser, not by mobile GoToWebinar app. Because app is only to watch live webinars so that you can interact with us and post your queries and questions. Recording would be available on the mobile browser. It can be a Chrome or a Safari as per your device operating system. You can open it on your mobile browser and you can watch the recording. If you're watching from a laptop or a computer, then just simply click on the link, follow the instructions. You will be able to access the recording link after an hour's time. So by 5:30 times you can check, you will be able to access the recording. And the same, this video would also be uploaded on our YouTube channel. So if you haven't yet subscribed, you can go to YouTube, type HDFC Securities, subscribe to our channel. There we have an exclusive playlist called webinars, wherein you can also watch the earlier webinars in case if you have missed out. And even this would be available soon. So that's all for now, viewers. Thank you so much for joining in large. Thank you so much, Mr. Arjun, for joining in and giving such an insightful knowledge in terms of market and as an ELSS as a concept. It was really helpful.
Thank you for your time. Thank you, friends.